Hello and welcome to episode 3 of our Talk Fintech podcast series. Today I'm joined by Greg Szabo, a director here at Zampa Partners. He is responsible for the internal audit and GRC function here. During today's episode we're going to be discussing the key control functions required by a licensed entity in Fintech, not only on internal audit but all the other roles that are required. So I think maybe we can start off right to it. Greg, so what are in your experience the most common governance gaps that you've observed early on in early stage fintechs, and how can they be avoided?
Well, based on my experience, let me highlight 5 which is quite common. One is the lack of ownership. So for example, governance, no one is responsible for that to implement. So it's basically a cultural problem that there is no intention to build a solid and robust governance framework in the organization, and the main focus is on the product and the revenue generation, which I agree it's more than crucial.
Yeah.
But if day one you are not building a culture when governance is embedded in the culture, once the volume is increasing, traffic is increasing, you will not allocate time for that in year 2, year 3.
It will be hard to correct it later on.
Absolutely. The other thing is the overstretching of the licensable activities. So possibly an e-money institution can apply for 9 different licensable activities, a cost for 10. But if an organization focuses on all at one go and there is no scaling, you're losing focus, and technically speaking, then you will not be in a position to implement those in time.
Yeah.
So I believe it's very important to prioritize and scaling the implementation of the different licensable activities.
You're saying if you don't scale, if you just start off, going completely on so many different licensable activities at once, there's a risk that implementing proper governance procedures is even more difficult, even more challenging.
Yeah, but from one person, I understand, because there is a kind of regulatory pressure that if you go for all the licensable activities, then the regulator's expectation that it does not exist purely on paper, but then you're actually doing. And this is something the regulator is following up.
Yeah.
But on the other hand, there is also another pressure internally from the investors, founders and the management that you want to do everything at one go, but it just purely does not work. Of course, it's a different story if there is an existing structure somewhere in another EU jurisdiction and someone establishing a subsidiary or branch, because then they can utilize an existing structure abroad.
And there's experience as well.
Yeah, but now we are speaking more about startups starting from scratch. The third one would be the weak monitoring and management and board level. When, let's say, the board often exists just on paper, so there are no frequent check-ins, no monitoring, no KPIs, no strategy discussions. So technically speaking, the board, the management is not working effectively.
Okay.
Let's say the next one would be the poor communication. Because, let's say, for example, the board agree on certain plan, implementation, deadlines. If it's then not communicated properly all the way down, and there is no ownership, then it's hard to basically implementing what was agreed on. But on the other hand, it's also very important that there should be ongoing active communication between the different C-level function holders and lower level, just to make sure that the message and deliverables communicated properly. And then I would say the next one would be the execution risk. That the board discussing a lot of things, the management discussing other topics, they have the business plan, but unfortunately there is no commitment, no ownership, and they are not executing. So they are dreaming, not executing. They have a very robust business plan, but they just, let's say, implementing 50% of the requirement. That's why I believe it's a very common post-commencement requirement from the MFSA, which is basically addressed to the internal auditors, that we have to perform an internal audit to give assurance to the board that what was promised in the business plan, the policies, the functions are implemented,
Yeah.
which is normally the deadline to do this after the 12 months anniversary of the approval. So overall, governance is just somewhere behind, and the governance exists just on paper.
Okay, and I think it's a fair point. And I mean, even from experience with clients that we've been dealing with now over the last couple of years, we see it a lot. Like in the sense that obtaining the license is not very straightforward. In the sense that it takes a certain time. There's a lot of documents which need to be prepared. And typically we find that clients are so fully focused on obtaining this license that they forget to kind of create a good foundation. And I even discussed this in a previous episode with Brandon and Margita, where we discussed that certain companies are so fully focused on the license that they forget to even structure from a tax and VAT point of view. And the same thing with governance, in the sense that we're so fully focused on getting the license and getting that done that they don't give enough time to setting up the right base from a governance point of view as well. So I agree with you on that one.
Yes, and just connected to this though, that it's one thing to get the license, but then you have to keep it.
Yes, agreed. So if I have to ask another question into this, again focusing on startups here, not the experienced entities who set up a new business here, how can startups balance agility and innovation, because they want to do something different to their competitors, they want to do something faster? How can they balance agility and innovation with the need for sound governance, in your opinion?
Well, there's also kind of, let's say, misinterpretation of the governance, and I believe sometimes it's considered as a necessary devil, which basically kind of stumbling block in the innovation, but I believe it's not true. So you can be agile, innovative, but then also building a robust governance. I think the regulators are also familiar with the fact that startups need some time to settle.
Yeah.
And I think it's absolutely appreciated. But of course the commitment should come from the management. And if you don't want to be perfect from day one, it's absolutely fine. But if, let's say, you have the intention, the commitment, and the time, and a good plan and monitoring, over a period of time you can build a robust and good governance. So I think it can work hand in hand, and you can be agile, innovative, but in the meantime start building something robust on long term. Because considering my 20 years experience in the regulated markets, all the best stories were attributable to very weak governance at the end of the day.
Yeah.
And it's an actual fact. And the other thing what we discussed previously, that you don't have to activate all the licensable activities from day one. So you have to give time for your organization to settle and build up. So in that case you can be agile, innovative, implement and scaling up the building of the robust governance framework. The other thing which I see as a common mistake, that there are no full-time commitment from senior function holders. So for example, you cannot build a company and good governance with a part-time CEO, a part-time CEO, or a part-time CTO. They should be there from day one, and they have to be focused.
Yeah.
They have to deliver, report, and implement. But if someone is a CEO of XYZ and CEO of another organization, I don't think it can work. Maybe there are cases when it can work, but if we consider the probability and the statistics, then most probably it will not be a success story. And let's be realistic, the first year is always chaotic.
Yeah.
And it's not about generating profit. This is something you have to accept. You can chase these dreams, but in reality, the more time you allocate on the governance in year one, the better chance that you can be more profitable in short term.
In year two onwards.
Exactly.
Yeah.
The other thing which I think also quite important with this situation is to establish a good, efficient reporting and escalation. Because let's say if the tech team is running fast, but let's say they have some bugs and issues attributable to let's say to third parties, and let's say the board agreed to implement a new feature which is contributing a lot to the entire business objective, but for some reason there is no proper escalation and communication, and they agreed to deliver something in 3 months' time, and the board and management informed in the last 2 weeks, sorry guys, that we are running late when we need another 3 months. There was no chance to come up with a solution. So that's why the escalation protocols, the reporting protocols should be established. So overall, I don't think that the governance is a blocker. It's something which can support you, but you have to adjust and tweak it and design it, considering also proportionality for your organization.
So I think the way you're saying it, so if I'm understanding you correctly, if you are a founder of a startup in Fintech, there are occasions where governance, the term governance is seen as something which is going to kind of keep people back from moving fast, from innovating and so on. But in reality, governance can mean different things. So you can take governance and the basics of that from day one and implement them immediately. As you are correctly saying, and I agree with you, it's not much of a blocker. It shouldn't be a blocker. Now, if you go overboard immediately, then possibly yes. But if you start doing some sort of governance measures initially and continue to build up as the business scales, it will make much more sense. And at least you have the basics there from there.
Absolutely.
And it's true in everything we do. Effectively, what we do well from the beginning, you typically tend to keep on doing those things in everything you do in life. So that makes a lot of sense. If we have to discuss a little bit more your experience in internal audit, maybe. So over the last few years, you've gained a lot of experience in Fintech, in licensed entities across a number of various roles, but I would say predominantly in internal audit. And again, I think we've had this conversation in the past. There's a bit of a misconception sometimes of what an internal auditor really is. And you are very passionate about explaining what an internal auditor is supposed to be doing. So, can you, for our viewers, what is the main role of the internal auditor, and how do you add value to the company?
First of all, we are not policemen. We are not there to judge.
Yeah.
I would consider us as a business coach. We can also highlight strength. We can identify blind spots. We can identify areas where we see level for improvement.
Yeah.
And we can come up with some recommendation to enhance the effectiveness of your procedures, your controls, and possibly contribute to be more profitable if we can identify certain areas when with a more efficient methodology you can reduce cost or increase profitability. That's why it's very important to treat us well and have an open, transparent, good communication between the management and the internal audit function. And overall, I believe that the internal audit function is more, let's say, efficient and effective if it's outsourced, because the independent, let's say, consideration of the internal audit function is better if the internal auditor is not involved in the organization. There are pros and cons, of course. If there is an internal auditor embedded in the organization, that most probably they have more knowledge on the operation. But I believe that with the right approach and methodology, an external internal auditor can also be in a position to gather sufficient knowledge to carry out the job properly.
Okay. And I think we've been in conversations with prospective clients, and these are questions which we receive pretty frequently. As an internal auditor, you focus on different areas of the business, different aspects of the business. What are the key areas, the key domains that an internal auditor generally focuses on when we're dealing with a licensed entity in Fintech? And when it comes to the number of audits, the frequency of audits, this is something we receive questions very regularly. When it comes to determining the frequency of audits during a particular year or a cycle, is there any guidance or best practice? How do you go around this?
There's no particular number, but for regulated financial institutions exposed to the safeguarding of client funds requirements, they have to perform one internal audit per year on those requirements.
And this came up from a
recently this year, January, there was the CEO letter issued by the MFSA.
Yeah.
So this is something mandatory, so we have one. I believe that for startups to give them some time to settle in year one, if we perform 1 or 2, it looks reasonable and realistic. But from year 2, once, let's imagine after 1 year, the company is settled, procedures, controls, protocols are implemented, depends on the complexity, 3 to 4 looks also quite reasonable.
So 3 to 4 audits per annum, focusing on different areas.
Exactly. And normally we are, let's say, designing a 3-4 year internal plan. So if you multiply by the years, then basically we can create a framework when we can cover the entire organization. Regarding the core domains, of course, it depends also on the licensable activities, but also, for example, considering the DORA requirements and the main pillars like ICT risk and governance, corporate governance, outsourcing, third-party arrangement, incident management, BCP, testing, operational effectiveness, the controls and the procedures of the financial department, performing reconciliation. These are quite common and important domains. The frequency, whether, for example, you have to ideally you perform one ICT risk management related audit every year or every second year, so of course depends on the risk assessment we are performing. But these are quite crucial domains.
And as an internal auditor, you submit, you prepare draft internal audit plan at the licensing stage, right?
Exactly.
It's part of the licensing process. Okay. Other than are there any other functions that fintech companies often overlook? Or MFSA kind of there's a requirement of what kind of roles should be there. Are there any roles which companies, from your experience, overlook but possibly should consider?
If I have to choose one, I would say the security leader.
Okay.
And normally the CISO is in charge to manage this role.
Okay, so it's the CISO, Chief Information Security Officer.
Correct.
Okay.
Because it's also included in the DORA regulation that you need to have a security leader.
Okay.
But it's not just a regulatory requirement, in my view. You have to assess this from a different perspective. In my opinion, the CISO can act as a kind of bridge between top management, IT, and third parties. In my view, a good CISO can speak the language of the board and can speak the language of the IT and the third parties.
Okay.
It can articulate an issue in a way to a board to make decisions.
Okay, so sounds like a very important role.
Absolutely, but sometimes the issue is that, for example, a CTO, or a technology officer, or an information operation officer, or an IT support is mixed with the CISO. But CISO should be absolutely independent from the, let's say, operational IT role.
Okay.
It's more a kind of supervisory.
Okay. So we take a bit of a step back, because we focused a lot on the internal auditor, but as we discussed earlier, there are other key functions. For example, there's the MLRO, there's the risk officer, there's the compliance officer. How do all, in brief obviously, because I know it can be quite a complex conversation, but how do all these different roles within the organization kind of overlap each other? How do they interact with one another? Mm-hmm. And are there any overlaps in these roles sometimes?
Can be, but going back to a previous topic, the communication here is also very crucial, because as we know, there is a mandatory requirement that on a quarterly basis there should be risk, audit, committee meetings and board meetings. And obviously on these meetings, the compliance, MLRO, risk, IT should basically report to the board and the respective committee. But it's quite common that these function holders unfortunately just speaking and meeting over those meetings. In my view, if we think about the frequency, again depends on the life curve of the organization, but also on the complexity. But I strongly believe that these function holders, involving also the COO, should meet more frequently, formally and informally. So I believe that it's very important to establish a good collaboration between those functions, maybe having quick weekly alignment or monthly alignment, depends.
Okay.
We have to consider proportionality, but it's very important to, from day one, agree on a structure that, let's imagine, at least a month, there is a particular time when they meet, they share basically information between different functions, they can possibly report certain issues, there should be someone who is taking care about the minutes, and there should be a framework how to follow up on certain actions discussed and agreed on those meetings. So there should be a kind of framework between, let's say it's not written somewhere that there should be a quite strong, let's say, governance around this, but based on my experience it's more than important. Because going back to the overlapping question, that it might be the case that the compliance and the risk and the internal audit monitoring program at the same time focusing on the same domains, which for me does not make sense. Of course, they're assessing certain things from different perspectives, but overall I believe it's very important to be aligned and come up with a plan for all the functions, to not overlapping and creating good synergy.
Okay. And I think, as of course we mentioned in different roles, there is what we call the 3 lines of defense model. Can you for our viewers who maybe are not aware of this model, can you kind of clarify exactly what this means and how do the roles kind of operate within this?
Yeah, basically, the first line we have the operational management, and for me, when we also speak about the risk, for me the management, the first line sometimes is the biggest risk, because if they are not knowledgeable enough and not committed and there is no structure, then we will face lacking of implementation of those things we discuss. The second is including like the risk and compliance function.
So the first line of defense is the operational side. The second is the risk and compliance.
Yes, and they have their policies and basically monitoring programs, and they also providing guidance, of course, to the first line. And then we have the third, which is internal audit, independent, which is giving kind of assurance that those other functional lines are
functioning correctly.
Exactly. If there is any gap, then of course come up with some recommendation.
Okay. Do you have any practical examples of how the 3 lines of defense can help prevent regulatory and operational failures in Fintech?
One very simple example. If, for example, when we have transaction monitoring, let's imagine that there is hopefully an automatic or a manual transaction monitoring in place, and the operational team flag a transaction, basically thanks to the existing controls, and then in that case they can avoid the regulatory issues, and then of course they have to report to the respective function holders. Then, for example, in the second line, over for example, the compliance monitoring program or over the checks of the MLRO, they are identifying, let's say, certain issues with certain transactions, which was not triggered by the first line. So then they can investigate what went wrong, and they can come up with an enhanced, let's say, a solution to tackle those. And as a third line, of course, our job is to assess the other two and see whether, for example, the MRO is really and truly performing certain checks or not, or the compliance function is doing their compliance, following their compliance.
Confirming the procedures are being
exactly. But of course, we have to perform certain checks on the first line, and so that's why sometimes there might be some overlapping, that I'm assessing and checking something the second line is also doing, but maybe my testing, my perspective, and my objective is a bit different.
Okay. I think I'm a bit conscious of time, so maybe one final question from my end. So, if you had to give one piece of advice to a founder, a founder who's looking to set up a fintech company, obtaining necessary license, what piece of advice would you give them on structuring their key governance functions? What would that advice be?
I will start with clarity, ownership, and transparency. Even if you have a lean management at the very beginning, establish the foundation of the governance and have a plan to scale it out.
Okay. And what about, if you have to look ahead, maybe this is the last question actually. Do you see any emerging trends in fintech governance or fintech structure or function structures that companies could prepare for? What do you think is going to be?
Definitely, and it's connected to another topic we discussed, the innovation and the agile methodologies. And considering that all of these entities quite tech heavy, moving away from, let's say, classical, more manual-based governance approach, they try to create a technological stack in-house which can basically support the GRC in a way that the GRC-related controls embedded in their framework, and it can be more efficient because using technology, possibly they can have certain monitoring in place on a daily basis on certain things which assess annually at another organization which is less tech heavy. So basically the innovation and the technology can also support the governance in that way.
Okay, very good. I think that's all for today, for the third episode of our Talk Fintech podcast series. Thank you, Greg, for joining us today. And we look forward to seeing you in the next episode. Thank you.
Thank you. Bye.